All right. Hey, everyone. I hope you guys are all having a fantastic day out there today. Not too much news out there in the markets, but everybody's getting ready for the Fed, excuse me. And I think tomorrow is just going to be a blockbuster day where we're going to see a lot of volatility, a lot of fun. So the goal for today is to talk a little bit about some of the news here, give you guys a few updates about the channel, talk about what's happening exactly with the Fed and Jerome Powell, because we do have some new news on that one, just a little bit here, not really much. And then from there, you guys can say hi to Loki. I got myself some tea, so we're probably going to be chilling here for an hour. After that, I'm going to finish up some work for the YouTube channel. Then I'm going to probably go smoke a cigar. Look at that. Nice ginger green tea. Ginger lemon green tea. I'll be drinking that in a little bit once it steeps up a second. Loki got his favorite donut toy up here. Oh, I want that. Loki. Yeah. So, we've been playing outside a lot. It didn't rain today as much, so he's been outside running. He also kind of talk a little bit of a, I can't say the B-A-T-H word, but something similar. So he got a little bit cleaner today. Oh yeah, I know. Oh yeah. Yeah. Okay. Happy to see you, Tommy. Happy to see you, Lisa. Happy to see both of you guys in here today. For those of you guys lurking, I appreciate you guys lurking as well. A couple channel updates before we get started, and I'll give you guys a little bit of an update about those later on. So later on this week, I'm going to start pumping out tutorials again, and they're really going to be basically designed on a few topics for now. And then I'm going to make 10 tutorials for a topic, but they're going to be kind of staggered. So the 5 topics are going to be things like smart money concepts by Lux Algo. They're going to be RSI, MACD, stochastic indicator, and Bollinger Bands. So for each one of those 5 topics, I will make 10 separate videos going over specific things. The main one will be like an hour-long video kind of giving you the overview, like for Smart Money Concepts, what everything does. The next video for Smart Money Concepts will be something like, hey, how do you trade order blocks? Or hey, do you want to trade change of characters or break of structures? How do you want that? So I'll have smaller videos within that are around like 15 minutes, while the longer videos that kind of go over the whole thing are going to be around an hour. So get ready for those coming out pretty soon. Because of how I'm going to have them staggered, I believe, though, I think I'll start off with Smart Money Concepts video number 1, the overarching one, then RSI overarching, then MACD overarching, then RSI overarching, then Bollinger Band overarching, and then I'll do the subsets staggered. So it'll be a Smart Money Concepts video, then RSI one over and over and over and over again. That way you guys feel like I'm not just giving you guys 1,000 Smart Money Concepts videos or things like that. And then as far as short form content, I am cutting up a lot of my old content right now and re-putting them on the YouTube Shorts algorithm. I am pushing all of it out quite fast. So if you feel like there's 20 shorts being uploaded today, I think there was like 16, you guys don't have to watch all of them. In fact, you guys know if you wanted to watch the important stuff, you guys could just watch the longer form video, but it's going to be there and you guys might see it in your feed. So if you guys can give it a like, I'd appreciate that a lot. So now back over to everything else going on here. And hey man, hope Florida's doing good. It's been raining over here quite a bit. Let me show you this very fast if I can. This 10, yeah. Here's the forecast for where I'm at right now. I ain't supposed to come out right, but yeah, rain, cloudy, then rain. It was pretty good. Last night we were having a bunch of stuff. Oh, and we have a flood warning right now, so we have a flood warning until Friday. It was bad. I was driving and I saw so many accidents yesterday. It was absolutely insane. Now, everybody's waiting for the Fed. Right now, we're not seeing too much of a move from the markets here. Just wasn't that big of a day, right? But this is the big news right here. The Fed decision is expected to feature a rate cut and a lot more. Here's what to expect. At this point in time, we all know there's a rate cut coming. We already know this. But is it going to be a hawkish rate cut or is it going to be a dovish rate cut? I think we already know it's going to be a hawkish rate cut as well. But there's always an opportunity for a surprise. So maybe that'll be it. But there's not really much to go off of, right? We already know that we have a bunch of lagging data because of the shutdown. We already know that the jobs market is doing absolutely atrocious right now. And we know that inflation isn't spiking like the Fed thought it would. So if we have inflation staying steady, which is good, we have jobs going down, which is bad, to me that says we deserve at least one more cut. What happens later on, we'll have to figure that out, but at least we get one more cut. But because the Fed doesn't know what's going to happen next, they're going to have to be like, whoa, We know the stock market is doing great. We know the jobs market is not, but because the jobs market's not doing too great and inflation isn't doing anything bad right now, we might have to put a pause on it because we're approaching our neutral rate. And so this is where, if you guys go over to the CME group here, you guys will see that there's an 87% chance we have a cut tomorrow, but there's only a 69% chance that we stay where we are by next month, which means no cut. And then there's only a 21.3% chance of a cut happening in January. This can move very, very quickly, but the Fed hasn't really been giving us clear guidance about what they really want to do here. So everybody's been all over the place. It's almost like they give us something to look at for the long term, but then they keep in the meantime, they keep on changing their minds, and that's bringing the probabilities all over the place. So I think we just have to believe when they say, hey, this is going to be harder. Like in the next 5 months, we're aiming for this rate, whatever. We just have to trust that they're going to stick with it, even if there's other things going on, because right now everybody just doesn't trust the Fed to keep their word, which is crazy. You want to be able to trust the Fed to do what they say they're going to do. Of course the data can change things, but typically you want them to keep it up, right? All right. So as far as the market today, everything was pretty much unched, nothing too crazy. JP Morgan was the only surprise I believe I saw today. There was some news right here that has it less likely next Fed chair, but most think Trump should nominate someone else. No, don't worry about that. That's nothing crazy. They've been trying to push that narrative all day. I was at the gym watching CNBC and they did not like him. Although when everybody found out he's going to be the next one, the market didn't care. That's the good sign right there. Mainly because he's been an economist for a long time. Here it is. This was some interesting news. Why did it take me right there? Oh, it's like news of the day. I see how it is. Okay. Well, JP Morgan Chase shares fell more than 4% Tuesday in midday trading after an executive disclosed higher than expected expense projections for the next year. The bank expects the full year 2026 expenses will reach $105 billion, consumer banking chief Maureen Lake told investors at a financial conference held by Goldman Sachs. That is above the roughly $101 billion expected by analysts surveyed by FactSet, right? So maybe they're going to do some layoffs or something like that, but that was kind of interesting, but there wasn't too much else. You can see on the trending tab right here, Fed decision, Trump officials moved to in-student loan payment pause for millions of borrowers. I actually already have that right here ready to go. This is only important. I don't want to get into the politics of this or all that type of stuff. As far as the economic thing, next year, a lot of people are going to get more taxes than they've gotten back in a long time because of the big beautiful bill, right? You're going to get much larger returns on your taxes, and for those people who are bartenders, they get tips and stuff like that, no tax on tips. They're going to have a lot more money. Part of the issue with that is if everybody has more money, they go out and spend. When companies see that people are spending a lot more money, they typically try to raise the prices to increase their margins, and that leads to a little bit of inflation. Well, part of what they're going to try to do, they won't say it, but I believe that part of the reason they want to get this back on track here is they want to be able to suck a little bit of money back towards the government and not into corporate. And by corporate, I just mean they don't want to see inflation go up. So if they're stopping a little bit of money from going towards propping up inflation by everybody going out and buying stuff, they're going to feel a little bit better about that. They're going to say because they want, like, you took a loan, you should be able to pay for it. Yeah, no, they don't care. They care about stopping inflation from appearing to go up right before a major midterm election. So just keep that in mind. Although if you have student loans, I guess you're probably not going to be voting for Republican in the first place. So we'll see how that pans out. But it's just it's an interesting thing working out right now. It's an interesting play. All right. Now, as far as the stocks and stuff like that, we had talked about that. Crypto's doing great. The stock market, not too much. So when you actually dive into what's happening with Bitcoin today, pretty much what we talked about yesterday. We have that short-term momentum that is still bringing us up here, that longer-term momentum that's still bearish, and we're waiting to see if we can consolidate to have a larger move that takes us back up here to the 50-week moving average. Now, we're still pretty far away from having multiple crossovers. I will say that if we do have crossovers, both are going to be happening below the 50 line right here, below the 50 line, and that could be good news for seeing something of a larger move. I don't know how high this is going to go, but you could see a good opportunity for us to at least push back up to the 50 right there. And if we're lucky and we see something a little bit more bullish from the Fed or something like that, you know, going into the end of December, even January, we might be able to push through a little bit higher, maybe back up towards, you know, this order block kind of like there to there, which kind of takes you from $107,000 over here to 99. We may go higher down the road, but the thing that I'm watching for, just to recap of what we talked about yesterday, there you go, is that eventually if we do make a surge up here, and this is a high risk surge of course, but people are going to try to play it, you may see a dip of a rejection and then something of a larger move, especially when we're bouncing off a nice level of support. It might be okay if we were to get rejected, break down here, have a larger higher low, consolidate for a while, have something of a trend line, and then we start to move up. And maybe sometime in March, that could be where we start to see the monthly charts getting a little bit more bullish, because we haven't had anything catastrophic here as far as like, oh man, the monthly charts are really letting go. Like way back over here, it was bad. We're not really there. There are some signals, but again, this is kind of a different bull market and a different bear market that we've seen in the past. But yeah, so there are some just little things to keep an eye out for if you guys missed the stream yesterday. Right now though, keep an eye out for the 50-day moving average. If we spike tomorrow off of some news, I probably would say we're probably going to head up towards 98,000 bucks, and we probably won't be able to break above that by the end of the day. So by that I mean if we break above it by the end of the day, we will have closed below it and probably have a nastier day afterwards. If you guys recall, this is the last time we had a Fed rate cut with a hawkish cut, and you can see we actually rallied up pretty well into it, and then afterwards we really came down for a few months while we just kind of waited, and we did have some larger moves. The monthly chart was bullish back then though. We're not bullish right now, so there was opportunities, there were some interesting things, but that's the last time we had a hawkish cut. That's the last time we had a hawkish cut. It was not a good day for us. You know, and again, we continued to cut through a lot of these times here. Not all of them, of course, but there was tariffs and whatnot. But it just wasn't that great. So if we do have a hawkish cut today, or tomorrow, excuse me, just understand it could be a little bit of a bloodbath. I'm not anticipating it as much just because we are seeing data suggest that, hey, in the short term, inflation's not spiking like it could have back then with Trump being elected to the office, right? And more importantly here, guys, Jerome Powell's out of the job in a few months. We're going to have Kevin Hassett most likely. If I can pull this right here. Yeah. We're going to have... I thought they would have had a photo of him or something. We're going to have that guy. Going to have that guy right there. As our next Fed chair, most likely. I should say, he just has a really goofy looking face, but like, what's he graduated from Swarthmouth College. It's a private liberal arts college in Swarthmouth, Pennsylvania. That sounds expensive. Founded in 1864, right? PhD in economics from the University of Pennsylvania, right? And then he has a supervision of this. Apparently a famous guy was his teacher. Okay, the guy's been through a lot of stuff. He's very, very smart. Very, 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 very intelligent. Now, he will go to bat for President Trump, and I think that's the issue here, but the guy is really good. CNBC will go against him hard. Fox News, Fox Business will go for him very hard. It's just going to be politics as usual, but the guy's smart. His goal, though, which I think is going to be good for us, his overall goal is to lower rates less than where they are now. He is not the type of guy that's going to bring rates all the way to zero. He's not going to do that, as much as I would love him to do that. The economy would get all messed up and stuff like that, but crypto would go booming, right? But he's not going to do that. He will be more bullish for the overall market, and I like to see that. He will protect jobs over inflation. You know, we've had this talk multiple times before where we talked about, hey, would you rather have a job and higher inflation, or would you rather have no job and lower inflation? A lot of people would rather have a job and higher inflation. That's where Kevin Hassett sits. Not crazy inflation levels, but yes, we would have higher inflation because rates are going to be going down more, right? But it's just not going to be the inflation of the 2022s where everything was like, whoa, whoa, I can't afford Applebee's anymore. What the heck just happened? I got Chipotle last week, guys. I had chips, queso and a burrito, and I believe it cost me like $24. You know, it's crazy. So it's just a weird little world we're living in right now. What I've been doing, saving me some money, which I've been basically, if I save money eating, I usually like spend it on cigars and stuff. So I'm not really saving money, but I'm allocating my resources more carefully. What I'll typically do is like I'll go to the cigar lounge, right? And they have a bunch of different food items there, which I really do enjoy. They have things like hamburgers, wraps, chicken tenders, fish and chips, salads, pastas, soups. You know, it's a good restaurant. It's like they have a Denny's type of restaurant attached to it. But what I've been getting since I've been dieting lately is I get this wrap, and they have a couple different versions of the wraps and stuff like that. But they have a wrap, but the wrap is only $11. Where if you got the hamburger or like another type of wrap, it's like $18 because they're charging the extra money for the French fries or the onion rings or whatever else you get. I like the wrap because I can eat the wrap. That's all I need to eat. I'm fat. I'm losing weight, you know. Get myself a water, which is free, or a Red Bull, which cost me about $3.50. And so $3.50 plus $11, $14.50. Give a $5 tip. That's $20 for the entire meal. I'm solid, right? But I'm also giving a $5 tip on a $14 thing. So I'm tipping a little bit higher. But still, I like that place. That's why I go. Plus, you get a couple cigars. That's another $6 or something like that. If you get the cheaper ones, at least. Maybe I'll get the cheaper ones. You get the point. But yeah, so there's some interesting stuff happening right now in that regard. But just keep an eye on this. You know, I go to the gym every morning, and usually when I'm at the gym, I'll be looking at CNBC. Although I can't hear it because it's on the gym TV. What I'll typically be doing is just looking at what they're talking about. And I've been noticing Fox Business and CNBC talking about Hasek quite a bit. CNBC, they're liberal. They don't like him. Fox Business is very conservative, as you guys might imagine, and they love him. Ignore the partisanship of the actual news organizations. For example, both of these are very liberal people. You go to Fox Business, you're going to find the exact same with the conservatives. But it's good to hear the arguments being made by both sides, right? So before I continue on very fast and we start diving into some of the other tokens, I'm just going to pour myself a small amount of tea here. I pour like a swig at a time in the cup so the cup can cool it down just a tad, right? All right, and then before I get going here, still over the last 7 days, we're looking okay. Bitcoin really hasn't done that much, but you can say altcoins have done a little bit. XRP kind of bland, but Ethereum is up 10%, BNB's up 3%. Dogecoin's up 1, ADA's up 8, right? Hyperliquid's down 14. So there's ups and downs here. Lots and lots of ups and downs here. How was Zcash today? Did it actually go up? Pudgy Penguin, no. Well, if it's not the best one, it must be the worst one because Zcash is all over the place. No, where's Zcash at? It must have just had a very bland day. Must have been very bland if I don't see it over here. Yeah. Oh, interesting. All right. But yeah, so overall, guys, we're getting a little bit better. I like the fact that we're seeing a little bit of stabilization. That stabilization brings us a little bit more time for it to have something of a larger move up. My concern is because the monthly charts are right now pretty bearish. Any move that I'm looking at, it's just not going to be something of, oh my God, this is the greatest time to be trading, greatest time to be alive, because everything isn't aligned anymore, and it won't be aligned for months because we have to wait for the monthly chart to get back in order. And if you guys want to ask questions about that, feel free. And then, like I said before, I'm still making $400 a month on the channel. But what I've done recently, guys, is I've started posting a lot more of these shorts. So I'll be posting like 15 shorts a day. You can see all these ones right here. They're unlisted right now. I pretty much changed the titles and everything I needed to do. All of that's good to go. And I go right there. So you're going to see a lot of shorts being posted every day. They're just cut-ups of old videos, but I need to start building up this catalog for myself for different reasons, which I'll talk about probably in a few months or so. Right now, it's kind of me just testing out some theories. And then there's no more videos outside of memberships here about specific technicals and things like that. No more of this top 10 best AI stocks, although this one is still grinding a little bit here, but it's kind of dying off a tad. So it's only going to be tutorials, so just get ready for that. No more anything but tutorials except for members. They get to see a little bit more cool stuff, I guess. But yeah, just keep that in mind here. And then last thing I wanted to talk to you guys about is It was something semi-important. No, it should be fine for now. Yeah, just get ready for all those tutorials we talked about earlier. I'm gonna be aiming to make one tutorial every other day. At the beginning, each tutorial will be like an hour long of just kind of a detailed explanation of how to use it, what it is, and then there'll be videos on top of that, like down the road, explaining more about the RSI indicator, whatever indicators it goes. But I believe the list is like, oh god, the list of like, I think the total list is like 20 indicators that I want to like really hone in on. So like the smart money concepts, MACD, stochastic, RSI. I already have some videos on them, but I'm just gonna double down and make new ones with all this updated stuff. And then there'll be things like Bollinger Bands, Ichimoku clouds, everything I can figure out. And then after that, we'll be building up strategies and other things you can kind of combine them with. And the only difference I want you guys to know is I probably won't only be using Bitcoin as the background asset. You're probably going to see me using Google or an Nvidia or Tesla or other stuff out there, Microsoft, right? So it's not always going to be Bitcoin, so just be aware of that. And then in these videos, you probably will start to see ads them for exchanges saying, hey everybody, if you guys are looking for a new exchange, make sure to use the link down below, right? It'll be about 15 seconds. That's enough for me to like say my piece, but not like make you guys start drooling and falling asleep. So just be aware of that. And yeah, so that's kind of stuff going on today. If you guys have any questions, feel free to let me know. I was trying to see if there was any really good things happening, and Ethereum is making a move, running into the 50, getting rejected by it right now. Hopefully tomorrow the Fed can get it going higher, but be careful because that could really get rejected. And the last time we got rejected, it wasn't pretty. Over here, playing around with the moving averages, not really much of a rejection point except for that level of resistance right over there. Dogecoin and whatnot, same type of stuff. Not looking too great, not looking too bad, but a lot of resistance levels right now. A lot of resistance levels, which I don't really like to see. Dollar index coming down a little bit. You can see a golden cross coming. That's not great for Bitcoin overall, but we'll see how it handles itself. And gold consolidating, may actually fall off here, which could be interesting. But yeah, everything else still going sideways here. The stock market has been knowing that we're probably not going to have a rate cut past December for a while. So now, instead of waiting like we did back over here last December for that large drop that comes along, we're kind of doing it ahead of schedule, which is kind of funny. We had the drop, we're coming back up right now, and then are we going to have another big drop? Who knows? Probably not as large of a drop because this was more of the Liberation Day tariff stuff. But you can see how we are mimicking some of those same moves we saw, but just earlier because now we know the Fed doesn't really want to cut after December here. But luckily for us, Jerome Powell is not in office much longer, and I think we'll be good. And I believe we're supposed to hear a pretty good Supreme Court ruling here as far as if Trump or the president can start to fire some of these heads of agencies that aren't really going along with the president's wishes. So, like right now, Trump has Biden people still in certain positions within the bureaucracy. Trump wants to fire them because they're not really pushing forward his agenda. I'm fine with that. On the other side, if a Democrat wants to fire whoever Trump put in office, those offices, fire him. I really like when government is all working towards a single goal. I don't like disjumbled government. I feel like it's just so corrupt. If the president tells you to do something because he was elected, listen. If he was, because you weren't elected, right? Regardless of who your president is, Democrat or Republican, like I hate bureaucracy. Bureaucracy, nasty. And hey, really happy to see my man. Crypto to the moon. I hope so soon. Yeah, stocks have been holding up. Bitcoin has not been holding up near as well. Down here, Lewis County is underwater. The Chronicle has some good photos. Damn, dude, I hope you're doing okay. It was chaotic over here. Let's just say that was chaotic. Just so many accidents going on. I was happy that when I went to the gym today, I drove over to the other side of town and wasn't that bad. It was dry. Right now, it's not even raining outside, which is a blessing in the short term here. The river to watch next few days is Chehalis. It's closed down I-5 in the past. Yeah, I've seen that for sure. Even the Puyallup River back in the day used to flood River Road, which would be horrible. And hey, Mattis, happy to see you. Hope you're doing well. If you guys have any questions, let me know. Right now, we're just chilling and talking about the overall market. We're really waiting on the Fed. Jerome Powell is going to be doing a bunch of stuff this week. Just a bunch of stuff. Or excuse me, not this week, tomorrow. Actually, let me go over here. No, Bloomberg requires too many ads. Let's go over here to CNBC. Anything else happening? Oh, yeah, tea's great. Something about ginger and lemon. It's just a really great pair. Don't ask me why, but it is. All right, so there was some big movers. F5, yeah. I think I own some of that. Not any of this big stuff, just F5 here. And hey, Steve, I appreciate the super chat a lot, my man. I really do. Thank you very, very much. Good to see you, Mike. My mom and brother say hi as well. Hello to Steve's mom and say hello to Steve's brother as well. I appreciate you guys tuning in tonight, learning about all the fun stuff of economics and all the craziness that Jerome Powell is going to unleash on the markets tomorrow. It's going to be a fun one. At least an opportunity to make some money here. Oh, and also, guys, I've been pro hawkish. See, yeah, hawkish for it's pro though, so we can't watch it. But what do you call? Traders brace for a hawkish cut from the Fed. Here's what it means. If you guys wanted to go look at this and what it means, you guys could actually go to YouTube after the stream and let's see. If I go over to CNBC, I forget the older gentleman's name, but he's a really chill guy. He always shows up early in the morning. You can see the videos I watch in the morning because I'm at the gym. Netflix, Paramount. If I didn't watch it this morning, no, if I watched it this morning, that means it could have been a video from yesterday. No, okay. It's that old dude that has no hair. I really wish I knew what his face was. But he was talking about a hawkish rate cut. Oh, there it is. Yeah, most extreme no hire or no fire economy we've ever seen, says says Wharton's Jeremy Siegel. That was 4 days ago. So that right there. Yeah, there. Yesterday. Yeah, expect a hawkish cut from the Fed this week, says Wharton's Jeremy Siegel. So just keep an eye out for that one, guys. That one's going to be a good one if you want to watch that video. But I just don't like what we've seen in the past, especially with Bitcoin. Like, last FOMC meeting calendar. So that fixed the glitch. It's trying to hide the data from me. The government is blotting it all out. Why is the government blotting it all out? I don't know. Well, February 2021, here we go. January 2023, August 2024. Why is it doing that? 2023. Why did it block all of... Okay. Government. Did they delete all of it? They might have deleted all of it. I don't see the reason for it. $26. Yeah, December 18th. That's all I wanted to show you. Was December 18th was the 2024 day. And December 18th, I mean to the day, was this. Right? So if we pull this back, let's say go to like an hourly chart. Pull it back as far as we can. There we go. This is why I pay for premium, so I can go back in time that much. Now we go for 4 o'clock. This East Coast time. There it is. Okay. So we actually didn't even go strong into it. We kind of had a rally. We dropped down the day before. We dropped down once we knew we were having the hawkish cut. And you can see the hour it happened, we came down from around 104,768 all the way down here to around 102,000. So we fell down about $2,000 or 2% in the first hour. Within the next hour, we had fallen down about 4.5% or close to $5,000. And then the following next few hours, next 9 hours, we were all the way down here to 98,700. So 105,000, 99,000 basically. That's a pretty drastic drop within a few hours. And that's all because the Fed cut. And what of course happened is we continued to come down for a little bit of a shakeout. And then things got worse when we started to hear more about Liberation Day tariffs and stuff like that way over there. But we had a nasty shake. We tried to shake out of it and we just weren't able to do so. We got rejected again, and that was all the way back in January before we were able to actually hit that level of resistance again. So I'm hoping for the best. I really am. I'm just hoping that I'm hoping that we can just get some good momentum back for us. The only thing I see right now, which is good, is although we have that longer term bearishness, right, that's pointing us down, if we can stay sideways long enough, that builds into sideways momentum slowly, but it does, which gives the bulls an opportunity to go higher, which of course can get the momentum back up. And the moment the momentum starts to shift for us, as you guys know with MACDs and stochastics and the crossovers, that's when we can buy over here and take part in those gains. It's just going to be so difficult to wait for that because that's not going to happen for months. What you guys are hoping for right now is if you guys are day traders or want to, make some easy money, you guys are literally going to have to buy right now around like $93,000, have a stop loss around $89,000, and then see if you can get all the way back up here towards $98,000 to $99,000, maybe up to $100,000, and sell right here. The ratio is okay, but it's not that great. And then on top of that, you're really doing this trade when you don't have too much momentum on the longer term charts because it's still ultimately pushing you down. What you're seeing right now is short term, but it's just not as strong. This is a tiny arrow. This is a big arrow. Sometimes I gotta speak like that just to make sure I understand what I'm saying, but I hope you guys understand that. Ooh, all right, there we go. I should have put some cayenne in the tea. Normally I've been putting some turmeric in there and it's been really good. All right, now, what's a better way? Yeah, I don't know. I don't even know if it's worth doing that trade. I mean, if you guys want to take an ambitious attempt, you guys can. You might even have something of a shorter. Maybe your stop loss is 89,672 instead of down here around 88,202. Maybe you save yourself $1,000 a stop loss. But let me pull this up. The smart money charts. So Bitcoin's bouncing off of support. We have the momentum that's been shifting over here, giving us a little bit of breathing room. The 4-hour chart, just like the daily, is still fairly bullish. And again, we're running into some resistance levels right here, which isn't the best. Yeah. I mean, the momentum gave you a short-term move. I just don't know if that really warranted a trade, right? You're going to have to use some pretty good leverage in order to make money off of that. Let's see. 1%. I mean, if you use 5x, you can make 5%. That's not terrible for an hour and a half. It almost makes you want to think that, hey, if we're bouncing right now, but we're also hitting a level of resistance, and you see momentum is kind of shifting all over the place right now, maybe if you're lucky, you can open up a short right now, play it down through the night, take a small amount of profit down here around 91,300, which is basically a little over $1,000 here with this movement. Take the profit down here. Whatever happens tomorrow, don't even bother trading because the market's going to be very irrational from the Fed, and you can maybe squeeze out a little bit of profit there. It's been a little bit more difficult here though. That's for sure. People have almost been needing to scalp. The scalping has been a little bit better. Not too much movement there. But again, we just don't have everything aligned. We want to see green, 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 you know, momentum shifting on the weekly charts as well. And we're just not seeing it here. Like if I were to add 4, this is daily 4, okay. I guess for now, let's just make this into the weekly one. You want to see the crossovers here and here and here. All of that have bullish crossovers. Really, the stochastic and the RSI are the biggest ones. I'm willing to take on a little bit of extra risk in order to have an opportunity to get ahead. For example, the crossover here and here, you could buy like right here. What day was those crossovers? May 28th. Yeah, I'd rather buy right here before that larger move than wait for that MACD to turn over right there. You still had a move to play, but you were able to kind of get in a little bit early. You knew that it was bullish. You knew you had a resistance, so it's okay to buy here and sell there. But during that, with the 4-hour chart being bullish and everything like that, you could have traded that weekly candle for a nice short-term profit while doing a swing trade and day trading, which would have been absolutely amazing. We're not looking at that bullishness right now, though. We're getting close, but we're not there yet. And we have to make sure everything else is aligned here, but we're not there yet. We're just not there yet, and it sucks. I think the one I wanted was this one. There you go, yeah. So for me, I'm still sitting on my hands. I wish I had some better news, but this is still like me just chilling and waiting. Maybe if I get desperate for some money or something like that, I'll do it, but I really haven't been. Just quick update here. I haven't done this in a second. Hey, Digital K, happy to see you, my man. Let me see. Digital KO, not K. There you go. Our portfolio went up 0.74% today, or around 0.1% after hours. The last time I loaded this thing up was like late November, I believe. Let me just go over here to vary. I think I can actually see the orders I put in for this one. Yeah, same day. November 25th. So technically I shouldn't be adding anything here until the 25th. So I'm going to wait a little bit, but pretty soon there's going to be another $100 in here. We'll add more and we'll see if we can double down into some of these positions. Right now, because I'm already a little bit overweight into that right now. I believe that's like a good chunk of my portfolio right now. Yeah, it's 30% of my portfolio because it's gone up 27% since we bought it. Plus I also bought a lot of it. I think I'm not going to buy any more of that in the short term. I think I may go into some of these smaller ones like OSS, which is only, well, that's up 41% since we bought it. Man, see, I should have just bought with a lot more money. See, that's the crazy thing. What was it, 1 month? We're up around 10%. If I would have put like $1,000 instead of just $100 a month, we could have been rocking and rolling. But this is supposed to be a realistic example, which is why I'm only adding $100. Because typically I don't trade on Robinhood, right? Well, QBTS is up 14% since we bought it. KN is up 3%. But what I think I need to do is, there's a way to change this, isn't it? There has to be. I also have the switch list right here, but I'm not going into that just yet. I'll do that starting in January, I believe. No, I didn't want to do that. Oh my gosh. Why are you doing that to me, Robinhood? Get out of there. Get refresh. No, you didn't. Oh my gosh. Okay, here we go. There you go. Okay. There's a way to change this to tell you the current price of it and not the amount of money you've lost or made from it, right? Like Big Bear AI, this thing is only around $6-7, right? That's cheaper to buy, so I can buy more shares. I might double down into some of those. SoundHound is $12, not crazy, but it's fine. Hasn't seen much growth, but again, I'm fine with that right now. Amber is down 10% since we bought it, down about 10.48%. It's only 8% of my portfolio, but maybe I'll toss another $10 into that one. So I want to buy into some of these things that I haven't bought into for a minute here. Maybe even InnoData. This one's down around 7% since we bought. Not like catastrophic, just not great, but it's only around 4% of our 4.5% of our portfolio right now. So I'm not too concerned. Kind of patiently watching some of those AI plays. But I think when it comes down to what we're going to be expecting for next year and what I'm playing with, I think it's going to be AI, $100 a month, and then probably another $100 into the switches every month for $20 investments, and then maybe $50 extra, so $250 a month. And I will invest in something else that's, I don't know what that would be though. Maybe we go with a nuclear play. I'm not entirely sure just yet, but I do want to have some fun and look to make some new portfolios. So kind of like some custom ETFs for ourselves, where I can buy $10 worth of that, $10 worth of that, $5 worth of that, but it has to be in a specific sector. I think there's some good money to be made there. I am thinking to have day trading target of 90,400. That's not bad at all, especially if you're trying to get us back down to that 20-day moving average. Right now, that 20-day moving average is at 89,713, right? So, you know, it can definitely go all the way back there by the end of tonight. If you wanted to go down a little bit more, you said exactly 90,400. 90,400. What support level was that? 90,400. What's around there? A little bit of a move right there. Let's see. Not come down deep for that type of thing. But again, it's already started to fall, so that's not the biggest issue here. It's just, are we going to have a roll off before the morning? And guys, just understand, as we get closer to this event, as we head up tomorrow, it is just going to be a very high risk environment for trading. So trade wisely. Don't feel like you need to go gung ho. The market is not going to be rational. I cannot stress that enough. The market is not going to be rational. Jerome Powell may say some stuff. Trump may tweet some stuff. The news may break some stuff. Whatever. It's just know it's going to be a little bit more of a difficult time in the markets. And if you want to trade, awesome. You guys know how to do it. Stop losses are going to be your very, 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 very best friend. Now, before we get too far down here, let me go over to XY fast. There we go. All right. Let's see. Michael Silla says the following U.S. banks are now issuing credit against Bitcoin: Citi, J.P. Morgan, Wells Fargo, BNY Mellon, Charles Schwab, and Bank of America. I'm a million. I'm a Bitcoiner. I'm a million. I'm a Bitcoiner. He's a Bitcoiner. They say he has a whole coin. Whoa. I wish that's what it's going to be like. In reality, they're probably going to be storming the castle. Bitcoin seems to be mimicking the 2021 cycle. Similar double top structure now bounce back to. This means Bitcoin could rally towards 100,000 to 105,000 level before the next big leg down. When you look at that a little bit here, I think they're probably using a weekly chart. This is the monthly chart right now. What I look for in these circumstances is not so much the head and shoulders. It's, are we breaking down below this level right there? Because last time, in order for the shoulder to be kind of confirmed, I mean, you can see the head, the shoulder, and the shoulder. It wasn't that great. But you guys have to remember, what made this so much worse was the actual crisis of exchanges being blown apart by liquidity issues, and Celsius going down, Voyager going down, BlockFi going down, FTX going down. I mean, FTX was the last little bit thing to drop, but it was bad. It was really, really bad. Go back over here to the weekly one so you can see a little bit more of the head and shoulders pattern. Right? Boom, boom. I would rather, right? Bitcoin's already broken down from that pattern. Just watch this one right here if you're looking to do something of a larger term short. Right? So this is a pretty good level of resistance for a while after we broke down too. That could also be the case. I will say though, this we're looking at all this type of stuff. This this was an attempted head and shoulders a while ago. When we look at all this stuff and what may happen here, got there, and you see the potential for this larger breakdown right here. Just look for those clean levels of resistance and support. There's a big order block right up here, and again, we just had that up on the screen here a few minutes ago. Keep an eye on it. Let's see what happens. We don't have to follow that same pattern here. There's tons of head and shoulders that never amount to a full rejection, right? There's tons of them out there, but we're going to need to see a little bit of change happening. Luckily for us right now, the economy is not really breaking apart and such. This may be something of a shorter term, shorter lived bear market. Maybe almost the point where we decide to break back down, kind of like here. You know, we had some support, we could have bounced up, but then of course exchanges were falling and breaking down. Luna, Terra situations, stable coins depegging left and right. God, those were catastrophic times. I think people forget how crazy of times those were. No. Maybe during this, is the worst we get is this former level of resistance, former level of support. Maybe our next horrible leg takes us down to $75,000. Now, I know we have Fibonacci levels and things like that. Maybe I can do that right there. All right, and then you kind of hit that little level right between these two. Don't even really need to focus that much. Like you can see the high point right there to there. It was actually a pretty similar point, right around 74,000, 73,960-ish. You know, but I think if you want to play that type of game where you're hoping for something a little bit of a 2019 market where we kind of consolidate, then we go higher, minus the COVID aspect to crash, right? You can just buy over here, but you know my rule. I'm going to wait and I'm just going to see what happens if we break down below the 150 weekly moving average. Why does it keep taking stuff off the chart? Hold on a second. I got to find another Bitcoin chart. You guys know it. It normally goes way back in time, much further. Since when did they delete so much data? There we go. There we go. My gosh. You fall below this, great opportunity for dollar cost averaging. Great. Right now, we're trying to bounce off of the 20-month moving average. And we did that for 1, 2, 3 months before falling down. We're in the process of month number 2, just FYI. Again, that being said, we break down below this, I'm loading up. Even if it's something of a shorter term type of thing like this, I'm loading up. My concern is this time it worked out for a few months, but what if we didn't have COVID? What if we just only had that for there? So if you guys don't want to be as aggressive, instead of using the 150, you guys go ahead and use the 100. A lot more leeway. This is what I started off with last cycle because this is me being more cautious. You can see how you bought a lot earlier. We're really close there, right? We're really, really close to that already. But you see, it gave you ample opportunity to buy a little bit more down here, you know, and then have that rally. But you guys know for this one, I started to buy around $26,000. And again, that's mostly because everything was so bad at this point. It was just catastrophic. It was really, really bad. But yeah, some of that stuff going on. Also, high risk driving, boating in Lewis County. I bet they're going crazy over there. People don't want to, they can't drive anywhere. They got they got what do you call? They got to take their boats out. Especially if you got a nice fishing boat that's not going to go too deep into the water. Oh, that must be really nice down there. But yeah, so just in case you guys want to go down that path as well, we've already breached that. We've already breached it, right? Wait a second. I'm on monthly chart. There we go. Wait a second. I was on the monthly chart. My bad. So here's the 100 weekly moving average. We've already started to break down below that. We're bouncing off of that right now. Also merging with the 20-month moving average, right? But You buy below that, you're usually pretty happy if you just wait. Now it's going to take you a little bit of time, a few months, maybe a year or two. This one, the damage was so bad from the exchanges falling off, it took years to recover, plus high interest rates, Jerome Powell, transitory. But still an opportunity, I would say. We break down below this, awesome. If you want to go with the 150, which is higher risk, but more lucrative, of course, it's only at 66,000. By the time we crash back down here, if we crash back down there, it's only going to be like February or, March or something like that by the time it gets back up to our level. It's not like it's like that out of the ordinary here. So again, I'm watching it closely. I'm excited to see what happens here. But like I said, I'm just not, I'm more of a dollar cost average type of guy. The fact this market ended in such a nasty way off of a trade tariff threat, I just don't know how we will recover from that right now in the short term. So instead of trying to buy a bunch of stuff and hope that it goes up, I'm just going to be trading here. And that's the best way for me to do it. And then, of course, when the swing trades align and everything's a little bit better, I'll do some really lovely swing trades with you guys and all that type of stuff. But until then, slow and steady wins the race. Slow and steady wins the race. So I'm going to hop off here, do some more work on the YouTube channel. I'm going to call it a night here. Thank you guys, everybody, so much for watching. Steve, I really do appreciate the super chat a lot. I'm going to go use that to buy Loki some treats. He's been out of treats for the last few days here, and he's not been happy with it. He's hearing me talk about him right now. There you go. Loki. Oh, you're such a good boy. Yeah. Oh, yeah. See, he's having a good day. Well, maybe not. He just wants head scratches down here where you guys can't see him. Where's Loki at? Yeah. Yeah. So he's having a blast. And hey Mo, happy to see you. So I'll probably stream with you guys after the FOMC meeting tomorrow, after we kind of see what's happening here. And then from there, we should be good to go. I'm excited to kind of see what happens tomorrow. It's just history isn't really helping us out right now. But, history, we can learn from it, hopefully. Hopefully the market learns from it. We can see what we can get done, right? Happy to see